Hi everyone, in this video I'm excited to compare two incredibly popular growth stocks in SoFi Technologies and Palantir Technologies. I'm going to measure these two across 5 different metrics starting with revenue growth, so let's get right into it. Looking at SoFi's revenue growth in the purple here, you can see it considerably ahead of Palantir Technologies. SoFi at 59.9% in its most recent quarter, Palantir at 21.86%. And if we go back all the way to July 2021, SoFi has consistently delivered better revenue growth than Palantir, say for just one quarter. The next metric I wanted to look at is net income for the trailing 12 month for SoFi and Palantir. Now, these are growth stocks and they are both losing a lot of money on the bottom line. However, SoFi is losing less money over the trailing 12 months, losing 320.4 million, and its losses are relatively stable. And looking at Palantir Technology, also negative, but more fluctuations with losses up to 1.2 billion for several trailing 12-month periods, and that's improved to losing just 560 million in its most recent trailing 12-month period. And little evidence for either of these two companies delivering economies and scale. As they've grown revenues, they've shown little evidence of increasing or shrinking their losses on the bottom line. The next metric I wanted to look at is their cash flow from operations. And for the trailing 12 months, SoFi's cash flow from operations is worsening, falling to 7.22255 billion over the trailing 12 months. This is a little misleading because they had to transfer billions of dollars from their asset base because they just received their bank charter, and so that's a little bit misleading in this metric. However, Palantir has shown very nice growth in its cash flow from operations in the trailing 12 months, going from nearly negative 400 million to 238 million in positive cash flow from operations. The next metric I wanted to look at is average diluted shares outstanding. And for companies that are growing as fast as SoFi and Palantir, they typically employ a lot of stock-based compensation in attracting employees by offering them stock-based compensation, stock grants, and stock options. And however, that has the side effect of diluting shareholders. So I want to see how much they are diluting shareholders, starting with SoFi going from about 125 million shares outstanding to 922 million shares outstanding. Massive, nearly 8 times shareholder dilution here. And then looking at Palantir, going from roughly 850 million shares outstanding to 2.1 billion shares outstanding. So almost triple, but nowhere near the 8 times shareholder dilution of SoFi Technology. SoFi is diluting shareholders much more rapidly than Palantir is. Finally, I wanted to look at valuation to compare these two, and since they're both losing a lot of money on the bottom line, I couldn't use the price to earnings ratio, and price to free cash flow I couldn't really use because SoFi is inconsistent in terms of cash flow and the billions moving to their after they got their bank charter. So to keep it as simple as possible, I chose to use the price to sales ratio to compare these two. And first of all, what pops out at me is the significant crash in Palantir's valuation from over 45 price to sales down to 8.9 price to sales ratio. So a significant one, it's trading at 1/5 the valuation it was in early 2021. SoFi, meanwhile, hasn't really experienced a similar decrease in valuation, and it's trading at a price to sales of 3.9. Still, even after the significant crash in valuation for Palantir, it's still more than twice as expensive as SoFi stock is. So, to answer the question posed in the headline, which one of these growth stocks is the better buy? I'm going to go with SoFi stock here because it's growing its top line faster and it recently received its bank charter, so that's going to fuel growth over the near term. It's attracting millions of new customers, and meanwhile Palantir faces more near-term headwinds as enterprises have really started to tighten their belts and reduce spending on these kinds of projects that could improve their performance longer term, but they're really pulling back on the reins here. So for that reason, I'm going to say SoFi stock is the better buy here between these two quickly growing growth stocks. All right, that's all I've got for this video. As always, I truly appreciate your viewership. Thank you for watching. I'm not going to ask you to subscribe because just your viewership alone, I appreciate that enough. All right, so thank you for tuning in, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.